charts, the numbers run. The market's dance has just begun. Lines and graphs, they tell the tale. Winners rise and losers pale. Options swing, the clock ticks loud. The screen's a storm, the trades are proud. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crown. The trades, the crown. The bell has rung, the dust has cleared. Dreams were made or disappeared. Candlesticks like fireworks fly. Risk and reward, they never lie. Charts don't sleep, they scream, they shout. Dive right in or you'll miss out. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the crowd. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the
Well, good afternoon, everyone. Welcome to the closing playbook for Friday, February 20th. Excuse me, I'm allergic to Fridays. No! I hope everyone's having a good day. Welcome, Kane. Welcome, Nathan. How you guys doing?
What is up? How's it going?
Hello, hello. Dave said, what's it going to be like when trading is 24/7? Well, I guess Kane will be doing a midnight show at that point in time.
That's right. Yeah. We'll go
All my-
shifts.
All my investments will be in companies that make medications that help you stay awake.
Oh. Well, guys, we are finally out of the range on. No, I'm just kidding. We're still right there. But I'm loving that. I'm loving our iron condor that Kane found for us, just grinding right along in the middle. So that's nice to see. See if things hang around next week. Kane, I took the most ridiculous trade I've ever taken today as a combination to that trade. Let me see if I can find it because it's kind of ridiculous. But
While you're doing that, there was a question for Kane about a message you sent in Telegram to ignore the RTX trade. People were asking what that meant. Well, one person.
There was an automated trade that went out in my 5x challenge that it was only up there for like a few seconds before I caught it and deleted it. But that trade was a mistake trade. It was in the wrong direction. So I closed it out immediately, and it was just a note for everyone to ignore it. And so hopefully you're not in the trade. And if you are, I would unwind it.
Yeah,
Okay.
Stephen Boston said he already got in it, so
Oh,
must have acted quickly.
fast. Yeah.
Yeah.
970. All right, I'm going to recreate this trade for you guys real quick. So just give me a minute, and then I'll share my screen as soon as I have it up here.
All right.
I know you guys are waiting in great suspense, but you just have to wait a little longer. Okay, I did the 6980. And I did.
David P., what broker do you have? Does it happen to be Robinhood?
Option X. I don't know about Option X. That would be if you're in an Apple trade for Option X, it's pretty old, right? It's pretty. What a Nate's probably at least 1 or 2 weeks old.
Yeah, unfortunately, the day before their news came out was when Option X fired the Apple trade.
Nice.
Teasing us a little bit now, like, hey, maybe it'll ramp up over the weekend and give us some life, but obviously not looking great.
Yeah.
Sorry, I'm trying to do this on option strat so I can show you visually, but it's a little bit of a weird trade, so I'm trying to make sure I have it actually showing right here. So just give me a second to make sure I have all my numbers right. 5.
Mitch, Sigma in options trading is volatility, and it's something that is extremely misunderstood in the markets. And it's actually something that you cannot set. It is implied. That's why it's called implied volatility in options, meaning that no one decides what that volatility number is, what that sigma number is. It's just you have to back derive it based on the prices. Even the market makers, even the people who are setting the prices, they back into it. So it's not something that they pick and they choose. Like you could, like delta is always that, or 50 deltas always right at the money, for example. It's nothing like that. So volatility is this thing that, number one, is difficult for most people to understand, and number two, they don't know how to use it, and number three, doesn't get set accurately anyways. So there's a lot of wiggle room for that number to be mispriced, or for options to be mispriced because of that one number. Out of all the Greeks that you have available to you, that's the one that gets mispriced the most often. So there's obviously an edge in there if you know what to do with it.
All right. Well, I set up my whole trade and then it wouldn't actually let me do it under the structure on option strat, so I had to start all over again. So I'm making a lot of progress here, guys. I'm really crushing it. Sorry. I really want to show this because it looks so wild on the table. I can explain it, but it just looks wild on the table.
Yeah,
so
get it up there.
trying
Get it up there
to show it. But I try to do it as an iron condor and then flip it because it's not actually an iron condor, but it has 4 legs. And then it said, nope. It just flipped it. Every time I flipped one to a buy or sell, it automatically flipped the other one. So,
wow,
so then I was like, all right, well,
you can manually construct it, right? You could just add a call, add a buy call, add a sell call, whatever it is that you need.
Yeah, that's what I'm doing now. Okay, 69, 75. And then I bought 69.80.
Benny, common sense says to buy in the money calls, yet you see out of the money calls skyrocket. So I'm not so sure about common sense when it comes to, oops, that's not the right screen. When it comes to options, because most people are very confused about options. So if I look over here, this is just SPY Feb 27 at the money is right here, or it's, either one in the money or one out of the money. So at the money somewhere right here. And according to your statement, common sense is to buy far in the money. And that's because people who have that viewpoint it's safer, right? You're not as influenced by time decay, and you're not as influenced by price fluctuation. So Delta might disagree with you if you just look at pure delta, because if I have an 80 delta, that means my price is going to move 80 cents for the $1 move away from the current price. But that $1 move only represents, in this case, about 5%, a little more than 5% of the value. So a $1 move will only move this 1%. And then if you go far out of the money, if I say, okay, well, let's say this 19 delta right here, we'll just call it 20 delta. That same $1 move is going to move this option 20 cents. And on $1.20, so that is 1 divided by 6, right? So that's a 12 or 13, oh, an 18% move, okay? So one only moves 5% and one moves 18%. So you are going to see these out of the money options move more likely to move on if it's a huge change in price. If it's a small change in price, then you're going to get eaten away by time decay. But if it's a ginormous change in price, then yes, these out of the money will make, they could make a huge. So for example, SPY's not the best one for this, but but you can see if this is a 10-cent option, and then just say delta was at 10 cents at that point, then that's 100% move and a $1 gain versus something down here. We don't quite get that at SPY, but we could potentially get it right here. See, 7-Eleven, that's a 1 penny option, and it's a 1 delta. So every dollar is going to change that by 100%. Yeah, that's but you have to offset that with the sensitivity to time, because obviously it could come back down. If it's a dollar move up and then tomorrow dollar move down, then that's not going to be as meaningful because it can be taken away just as fast.
All right. So we got Mr. Big D Dave he, in the chat being a smart aleck. It's not my broker platform. It's option strat that I'm trying to figure out. I already took the trade in my broker platform. Okay, Mr. Snothead. It's option strat that's automatically flipping it around. So Kane, you'll have to help me, because while I'd like to continue defending myself to Big D, I am too stupid to get this to work in option strat because it keeps flipping the trade as soon as I do it. So, okay. What I did, I'll show you what I did. Because this trade looks so good to me, I thought, what if I hedged against it? And so I actually sold another call spread up here, and then I bought the debit spread right above it and basically paid the net difference for that, which was 20 cents. So if I end up below it, I lose 20 cents instead of, the normal debit cost. But if I get above it, I make $5 is the idea. So it's a hedge against if it does break out and it breaks to the upside.
Okay. So are you evaluating it with the original trade or with just on its own?
Well, no, just on its own. And I'm trying to, so when I want to do exactly what I did, because what I did, oops. Hold on. First, what I did is I just did a credit spread. I think my numbers were 65 and 70, I'm pretty sure. Okay,
great.
So that's the credit spread. Then I basically bought a debit spread on top of that. But when I do this for some reason,
buy call, yeah. Okay.
So I bought the 69. Wait, why did that switch? That's not right. It should be that and that, and then 69.75, and then I sold 69.80. Right, that would be my debit spread.
Yep. Okay.
But you can see as soon as I do that, wait a minute, that doesn't look right. And why doesn't it look right? Because it flipped this one and this one around for some reason. And if I switch this to a negative, it flips other ones.
All right. So you bought the 69.70 and you sold the 69.75.
Let me see what my actual original trade was. Okay, so the credit spread was the bear call was 69.70, 69.70, 69.65.
Okay, so you did a bear call 69.70,
which I think
69.75. Okay, so you need
that.
So
right, so that's the original.
So 69.65, 69.70.
Yes.
Okay.
So that's the original, but then every time I add something on top, it keeps flipping it back around. But the idea of the trade, I'll quit wasting our time. The idea of the trade here is that I still lose something even if I win the call spread, But because I got some credit for that, I'm basically making this net debit less expensive overall.
All right. So tell me your second spread. Again.
Just one strike higher. So I have basically that $5 no man's land in between. 69.75, 69.80 is the debit spread.
69.75, 69.80. Okay.
Yes.
Yeah.
So if SPX finishes at 69.72, it's gonna be a really bad day for me. but
So just go into the chat and then grab that option strat and then just put in the appropriate prices for the spreads that you had.
All right. Let's see. Oh, yours doesn't automatically link for some reason. See if King can help me out here. Oh, I see. I didn't grab the whole link because of how it looks in the chat.
Just add an H in the beginning.
Okay. Hold on. Guys, we're professionals, I promise. This is really going well. Okay. So it should, yeah. So this range, this shows it to you. The numbers are different because I paid so little that the upside here is like 200%. But
yeah,
just
the prices aren't right. Yeah.
Just to move on with the point here, as things go a little bit crazy, the idea is exactly this. As we narrow down here to the very end of the trade, there's only about a 0.1% universe where I don't win net. And that's because even if it finishes below, I have that trade that we put on with Kane that pays 100%. That I'm kind of counting as a bonus as part of this trade. And now I have this, kind of crazy hedge to the upside. So I don't actually know if I'm further ahead doing it that way. I was trying to run the numbers, but I got distracted and was in a meeting. So I just put it on because the price seemed good to me. But I kind of want to know going forward if doing it with a little bit of, call credit insurance, but having that little 0.1% risk of like catastrophe risk, if you will, is better or not. So
yeah, well, anyway. I'll show you. I can show you how you would actually using the duck bill strategy. It'd probably be a little bit easier, but we can show you how to do things so that it actually becomes a risk-free trade.
All right, let's do the duck bill because we are 2 for 2 on those, right? Well, I guess you didn't let one expire yet, but looking 2 for 2.
Right. Yeah. Yeah. So, all right, let me share my screen.
Yeah.
Again.
Snothead is about as aggressive as a conservative Christian guy with 7 kids. Snothead is about as aggressive as it gets. Okay, guys, you have to bear with me.
Yeah, your vocabulary is limited to 8-year-olds.
Yeah, exactly.
Oh. So let's take a look at an option strat. We'll build a long put condor here, and then we'll build it into a duck bill. I'll do it on SPY. Might as well. It doesn't really matter. SPY, SPX, XSP. There are some inefficiencies, so you probably get a little bit better opportunities on SPX just because there's a much wider range of strikes or strike distances that you can play around with. But we'll just build it with SPY for now. The way I'm going to look this week is because there's so much volatility, I'll just look at the probability in the money. And I'll look for about 80%. This is not the way I always do it, but that's the way I'm going to do it today. So 672 is about 80% in the probability in the money. I guess 673 would be closer, but 673, 672 is a little bit more conservative. So we'll go with 672. I'll drag this one down to 672. I'm going to go, let's start with 3 wide and then I'll make it 2 wide if I have to. And then we want a duck bill. So I'll drag this down. That gives me the duck bill. And actually, so this is $11 on $1.89. That should be around 8%, I think. 6%, okay, a little bit off. If we go down to say 676, okay, then you get 15 divided by 185. That's 8%. I'd like to get somewhere around 10% is where I like to get. So I might just tighten that up a little bit. And I need better credit. So that's not going to do, 672, right? I had the wrong. Okay, let's do that. See what that looks like. Okay. So we'll tighten that up and we get okay, 675. Okay, so that's 674, 675. That's pretty good. I prefer a little bit wider. We might have to do six.
It looks like you have to be kind of narrow today to get
Yeah.
the net positive risk reward just because of where pricing is right now.
Yeah, the market is moving a little. So let's do 693 or 673 because that's a little bit the one that was also right around 80%, but a little bit less conservative. So we'll do 673. And I'll get this out wider. See if we can get, yeah. Not really paying very well right now. That's probably bid-ask spread. Okay, here we go. 9 divided by 8. That's about 10%. Just a hair under 10%. Okay. So if we're anywhere above 675, we make 10%. And if we're in this range between 673 and 6, that's pretty narrow though. Yeah. Okay, let's just keep this as a concept trade today, okay? I don't want to put on risk in this giant volatility environment if we're not getting paid the way we want to get paid. Yeah, okay, so we're not actually going to put this trade in. This is a learning moment for you guys, okay? So let's just say I do this trade, okay? So I'm going to lock down these prices. Duck bill example. Okay. So I have this basically 2 credit spreads right here. And if it was an iron condor, we would call it 2 credit spreads actually. It's actually a debit and a credit, just like what Nathan just showed you guys. It's just that the credit, we're collecting more credit than we're paying on the debit. Okay, so I would want to, or I would need to unwind one of these. If I unwound it, then it would just become the normal spread. Okay, so there's be if I unwound these 2, then it would be my normal bear credit spread. Okay, my bull put credit spread. Okay, so let me show you guys if I just exclude these 2. Okay, that's what happens. So if I put those back in, okay, and just say, I want to guarantee that I'm going to make $1 at least, then I would have to pay no more than $8 in order to unwind this. Okay. Or if I didn't want to do that, what I can do, because sometimes we have a couple of issues. If I'm doing it on the same day that I put it on and I don't want to generate a day trade, then I can't just unwind this. The other thing is there may be some weird issue going on between the skew between the puts and the calls, or I might have so many trades on that having these puts, putting on or taking off these puts confuses my entire position. So the other thing that you can do is you can just do the calls, right? So instead of 676, I could sell the 676 call No, that's not what I want. Add a 676 call, and I sell a call. So if I sell this 676, buy this 675, okay, you see how that turns it into basically the same looking structure. Okay, and this is a debit spread. No, it's a credit. Yeah, debit spread. Okay. So as long as I pay no more than 8 cents on this spread. Okay, so just say I bought it for $16.88, and I was able to sell this for $16.80. So obviously prices have to move, or enough time has to decay in order for me to get that. Then that didn't completely neutralize the trade. Pay for, okay. That should have, was net credit is, let me see what's going on here, guys. Sorry. The math isn't mathing. Sorry. There's something weird. There's something weird in here that I put. But in any case, the idea is that you get enough profit on this trade that basically you have no risk left on this this credit spread right here. And then what you get as structure is something like, and I'll show you, you know what, I should show you in my notebook, but I will show you in just a moment. But imagine that you were able, instead of a credit right here, you were able to get a debit on this. So you bought it at 177 and you sold it at 175. All right, does that make sense? No, I need to do it the other way. Everything. I switch roles with you, Nate. Now I'm the one confusing myself. I was like, all right, let me just show you on my notebook. I completely threw myself off. Okay.
I do it all the time.
So I just flipped to a random page on my notebook, and there's a perfect example right there. So here we started out with the spread with the condor, and it was the duckbill pattern where you see there's a minimum gain that you'll make there and a maximum loss, and then a center area where you make a whole bunch of gain. Okay. And then we did an unwind trade, and what you can see is that originally we net sold, so the ones that we buy was the 39.70, 39.30, which is exactly the first two right here, okay? So it is the essential unwind of this, okay? And that created a graph like this where every single part of that graph is completely above the zero line. So you're guaranteed profit. You just don't know exactly how much profit. It's going to be somewhere between $50 and $550. Okay? And then if you wanted to neutralize it, basically you don't want to unwind it for whatever reason because of maturity or whatever in your portfolio. Then you can just take the opposite trade using, if these were calls, then you would use puts, or puts you would use calls, and then that flattens out your curve, and then you just hold everything to expiration, right? And then that you have a guaranteed exact profit of 270. You know exactly what you're going to make, and you just hold it to expiration. Okay. So that this is basically what you did, Nate. You had a condor that looked like this, and then you had a condor that looked like the opposite. So if you just flipped it around, except there was this narrow strike difference that where you actually still had risk. Instead of covering the entire range, you kept that 1 or 2 strike difference that created that narrow pit.
Yeah.
So I'll come up with a better exact examples next week. So well, we won't mess it up so badly next time.
Hey, it's Friday. We're allowed. I like Sean says 6-legged duck. Well, we'll call the strategy the 6-legged duck. It'll be a whole new thing.
Right.
But
Big D said, where can he buy Kane's notebook?
yeah. Let's just do a quick update because it is about 3:58 just to see kind of where we're ending here on the day. Take a look at the market map. Let me just refresh and see where we're at right now. All right, looks like we're going to finish right around 0.67, 0.7. Qs, we're up about 1%. Couldn't quite carry it all the way up. Small caps ended up down, which is a little bit of a surprise to me. But, and the big but today, is that MAGs actually outperformed everything, which we haven't seen MAGs really be the leader in a while. Even when tech is winning and Qs are winning, the MAGs have actually continued to underperform, though. So, obviously one day, we're not getting carried away here, but nice to see MAGs actually participate, have a nice, big, strong day, up 1.5%. And then, of course, Bitcoin and gold up as well. And if you look at our overall heat map here, it has really made a nice flip from early in the day to later in the day, with now 63% of our top 100 stocks showing as green, and the average green being just a little bit healthier than the average red. Again, a good mix of stocks here too, but a lot of the mags and the big techs, you see Google right at the top, Amazon is up there, Meta's up there, several other of the big names. Apple financials are also doing pretty well today. Relative to what we've seen before, but still not great. Here's the actual, you can see the sector view, about 0.5%. So good, not great. But there you can see the communication sector with Google and Meta, driving us up. Discretionary doing quite well as well. So ended up being, I think, a pretty good, healthy day for a Friday. We have, for the most part, seen our healthiest days get faded in the immediate next market session or two. So that'll be obviously what to kind of watch for on Monday to see, hey, can we follow through with some momentum? Or are we just going to kind of, get that rotation right back where maybe, Monday healthcare is up 2%, but tech's down 1%. We're right back to, fighting near the range that we're in on the SPY. So that'll be interesting to see, because this is probably the most attractive day we've had in a little while, meaning even when we had that really big day, I guess that was last Friday, right? That was 2% up. That was much more centralized in tech, that we got that big run. A little bit more participation here today, which I thought was good to see. And then one of the things that I was looking at as far as some stocks, and hopefully this will still load after the bell. I think it will still load for me after the bell. I'll give it a second. But we've talked about some stocks that could be good for income opportunities while the market is indecisive. And so that's kind of what the stable stocks idea is. It's not a signal in and of itself. Pretty much like nothing on this dashboard is going to be a signal in and of itself, just kind of context. But basically it's saying, hey, what stocks have not really moved outside of a normal deviation in the last 90 days or so? And I noticed Eli Lilly right at the top, and it has been, as you can see, pretty much going nowhere. But the thing with Eli Lilly is that it moves a lot. So you actually get quite a bit of premium even when it's a little bit stuck here. And so that's that trade that I gave you guys in the chat. Again, there's almost no volume, so you have to be careful when you're trading those random weekly options on something that doesn't have, a ton of volume. Number one, always use a limit. Number two, you have to be willing to hold it because maybe you can't get a good exit on a trade that doesn't have a lot of volume. But this is like a aggressive defensive trade is how I describe it. So I'm not giving it a ton of room, but I am giving it a little bit of room right here at this whole $1,000 number. The thought here being that since November 12th, Eli Lilly has been below that line for about 2.5 days total in that whole entire period. It's held up. You see one dip here, a test almost there, this test here, and basically a test right back here now. And as you can see from our market map here, Eli Lilly has been very stable, hasn't made those big outsized moves. So This is one, if you could get the numbers that I gave you, which I actually didn't get filled. I went up to about 273 and didn't get filled. So maybe it's a moot point, but we'll check it again on Monday. I think Eli Lilly is a good candidate for some of those semi-defensive trades on the income side. We've got I got a couple more here that I think are interesting. Some are on the financials, some in the tech sector, and a couple others actually in the industrial sector, like Boeing. I haven't actually looked at Boeing in a little bit after it got on that run. It's given back some. So yeah, maybe even Boeing, if it can find some support, would be an interesting trade, because I think this 235 range is probably the big recent level there, which it might be making a move under. So there's a couple others that I thought were interesting. Oracle, that's not one you want to trade, probably. Where was that? There was a couple others that I thought were kind of interesting that we can remember to come back and check on Monday for some of these more defensive stocks, some of the health, the staples, Coke, Pepsi. Those are ones that I think right now we might be able to get a little more premium than we have been able to get in the past. Of course, Raytheon we traded. That one's a great one and has been really stable. Will give us some premium. Even Exxon and Chevron now probably giving a lot more premium than they were a couple months ago. So keep an eye on these stable stocks. I think those are worth watching. And we'll see, as long as we're in this kind of sideways market environment. I'm going to always lean more in that direction. What can we get with premium? What can we get a cushion on? What don't we have to be super decisive about to get an opportunity is where I'm going to feel the best in most of those cases. So just a couple there to give you to put on your radar. By the way, I didn't actually mention this, I don't think, on any public forum, only to the members of my other services. I did finally get this market map set up to send daily updates to the Telegram channel. So it's just a private Telegram channel for market map. I am charging a whopping $3 a month for access, just to help offset a little bit of the data cost to do that. So if you want that, no pressure. That doesn't matter to me. I'm not trying to make money off you at the $3, but I know a whole bunch of people over time have asked, hey, how do I get Nate's sector bubbles? How do I get the heat map? How do I get this? I set up a Telegram. If you want to get that, you can. It's $3 a month. And it'll just give you like the broad market update, the sector update, and then throughout the day, some other things like the trend snapshot and different things like that. By the way, you also actually get my Three Rivers trades, which used to be a separate subscription for $17 a month, as just, again, a low-hanging fruit thing, but it's actually included in here for the $3 a month. So if you want to grab that, Dave posted the link. No pressure there, but just wanted to make you aware that I did finally get that updated and live if anyone wants it.
Very nice. It's a nice, cool little tool. And context is everything, right? You always want to start with context. So having a lot of things very conveniently laid out like that is great.
Yeah, and just, I mean, to that point, just to be clear, it's never going to give you a trade alert, right? That Telegram channel is never going to give you a, hey, buy Apple here. It's always going to be context. Hey, this is what's going on. Here's some things to look at. It was just kind of how I